All right, good morning, everyone. It is 8:52 in the morning of, February 14th, Valentine's Day, 2022. So this is where I'm starting today. I'm going to start on the SPX. Let me get this Fibonacci out of the way here. In the risk range we have here, at the high end I have 45.68, and at the low end I have 43.75, and that corresponds to a VIX. So you're never supposed to chart the VIX, by the way, but I did. Don't hold it against me. So that one, let's get that one out of the way, and then we'll get this one out of the way, and we'll get that one out of the way. Okay, so here's the risk range on the VIX. So we're pretty close to the top end of the risk range on the VIX right now. And so today, I kind of imagine, today will probably be a pretty tough day for trading. It really kind of depends on how much the VIX decides, how much people are willing to jump back into the market for the week. And I say that meaning people who are trying to generate alpha. There are always people who are participating in the market who are looking for ways to increase their percentage gains, by 0.5% or so over the week. And if that means that today is a bit of a relief from the downdraft we saw, especially on Friday, then, so be it. Just trade in the direction of the trend, will definitely increase your probabilities of being profitable. However, also, you got to play the game too. So here's Friday. This is Friday. This big down candle is Friday. Thursday, Wednesday, Tuesday, Monday. So Monday last week was a little bit of a positioning day, a little bit of a down day. Look at the symmetry in that too. It's really interesting. As far as symmetry goes, I think there are a lot of people that would probably expect this to kind of come down and test this area again right in here. But you never know. And so today I will be looking for bearish setups because that is the direction of the trend. However, I wouldn't be surprised to see this thing push into and make a bullish, I wouldn't be surprised to see the bulls come out today. It's my personal opinion. All right. But what's happening here is there's often times where news is kind of controls the fear and greed index, right? And with kind of everything that's going on, geopolitical risks and inflation and, what was it? Kashkari came out a week ago and said, I've forgotten, Bullard and Kashkari. Kashkari came out dovish and said something dovish, and stocks rallied off of it on one of these. I think it was last week on one of these 2 days. I can't remember. Or it may have been the week before last. I don't know. And it's really hard to keep up with everything that everybody says and how it's going to push the markets around. But we basically had two different Fed officials come out and make a bunch of noise about dovishness and hawkishness, and it's caused quite a bit of volatility. So, what I think is really going to make a difference is, what happens at the next Fed meeting, right? And do they decide to tighten? It's all happening pretty quickly too. The Fed is still buying bonds. There's still, I've forgotten, something like $25 billion being spent. I think it's this month in February. I don't remember how much it is exactly, but it's in the tens of billions of dollars being spent on quantitative easing, where they're getting ready to turn it right around and start tightening rates in February. I think it's really strange. When it seems to me they ought to start tightening up their balance sheet, reducing their balance sheet, reversing the quantitative easing before they start raising rates. If you pack if you pack a storage container, the only way you can unpack the storage container is to take out the last things that you put in. Like if you've got a storage container and you've got that thing packed, from floor to ceiling, In particular, shipping containers are examples that I really like to use. The things all the way at the back are the things that you pull out last. So those are the first things you put in. And the first things you take out are the last things you put in to the container. So, and it seems to me that quantitative easing ought to come off first. If you're going to unpack it the way it got packed, if you're going to unpack this container, suppose for a moment you're packing a whole bunch of quantitative easing and rate reductions into a container. I mean, I know it doesn't have to happen that way. It's not a container, but it just makes sense to me. I mean, why not unpack it the way you packed it in? But what do I know, right? I'm just some jerk on the internet who trades for a living and, has basically been doing it for 3 years now, full time. That's like nothing. So, okay, there's still quantitative easing going on, and there's still money to be made to the upside on these setups. Oh yeah, you know what? Something else too I wanted to point out is this. Okay, so I saw a couple of people putting in what they would call a head and shoulders pattern. They're like, this is a head and shoulders pattern. This is a head and shoulders reversal, so on and so on. I'm not seeing a head and shoulders pattern on the daily. If you go to the weekly, you might be able to make a case for a head and shoulders pattern here. Like sort of like this is the left shoulder, here's the head, and here's the right shoulder. And that is one devastating neckline. If you take the neckline from there to there, I mean, that is a steep, and it is actually, so the head and shoulders I've also seen people put in on the daily here. Actually, let's go back to the daily. Let's make it 1 day. So the neckline needs to oppose the direction of the previous trend. Now, I've seen people calling this, and this is incorrect. I personally, I don't really see a head and shoulders reversal happening here. I see a different sort of just a pattern reversal happening. But essentially there are people who are calling this, so this would be the right shoulder, this would be the head, and this would be the left shoulder. And then this red line right here is the neckline, and this right here is the drop below the neckline. Well, they're incorrect. This is not a head and shoulders pattern. So the right shoulder over here needs to be lower than the left shoulder for a true head and shoulders pattern to exist. You see, this is the high of the left shoulder. Here's the high of the right shoulder. The right shoulder blew out the left shoulder in this example. And this neckline is not in the opposing direction of the trend. So here's the trend. Here's the overall trend going this direction right here, right? The neckline needs to be pointing, for it to be a true reversal, the neckline needs to be pointing this way, not that way. All right? So there's some folks out there, I don't know where they learned their head and shoulder patterns from. I don't know where they taught. I learned mine from, Link is his last name, I think, High Probability. So this is the first book I read on trading. High Probability Trading, Link, I think his name is. Marcel Link. Yeah, there it is. Yep, there we go. High Probability Trading right here. This is an old book. Let's see. I don't remember when he first published it, but this is the first, and there are notes all over this book and scribblings and bookmarks and stuff like that. And this will explain to you money management, risk management, high probability trading. This is an outstanding book. And it will explain all sorts of technicals, fundamentals, money management, risk management, and so on and so on. It'll kind of lead you down another path to some other things. Great place to start for trading. Well, the true Head and Shoulders setup is explained in that book, and in the way that he explains it, it's very rare to get true Head and Shoulders reversal patterns. And actually, I've got one, and I've got two. I should take more time to pull up the other example. But anyway, the real true Head and Shoulders reversal pattern, if there's one that's in, is, let's see, that this, okay, suppose for a moment, see, the thing is though, is this right-hand side right here just blows it up. This right-hand side, the break over that shoulder right there, I guess, you know, if you call this whole thing the left shoulder, and then call this whole thing, that doesn't make sense though, because the neckline, here's the neckline right here. Well, there's no real, this isn't a pretty, if this is a whole Head and Shoulders reversal, if this is the reversal pattern, I see a reversal pattern here, but I don't see a Head and Shoulders reversal pattern here. But in any case, if this turns out to be sort of an anomalous, there's this anomalous break over the left shoulder right here happening on the 2nd of January, or the 12th of January, sorry. This is the neckline. If this is the neckline, this thing is gonna, so the S&P is about to tank to be able to break that neckline. We're talking, I mean, look at the size of that. I mean, that is an amazing, look at the slope of that. That is a tremendous neckline. And we're talking, severe downturn in the markets. If that plays out, I mean, it's possible. I mean, if it does, I mean, watch out. It's going to be crazy. I mean, it's not looking good either. I mean, look at this double top right here on the side. Couldn't break through. I mean, these are pretty nasty looking. This is nasty looking. If it weren't, for the Fed and so on and so on, if this were just some other regular stock, like say Microsoft or Tesla or something like that, I would be like, short the shit out of this thing. I mean, I would take 10% portfolio risk on this setup. This is so bearish looking. This setup is extremely bearish. However, this is the S&P, and any little utterance by some Fed official, whether they're a voting member or not, can turn this market on a dime. So there's way too much risk in going big on a move like this. Even in these times, the risk management is key here. Fortunately, I was averaging into short positions here, and I did close out vast. I think I have one more short position still open on copper here. So we'll see how that goes. 4% uptick today in copper. Yeah, I might have to, oh wow, look, copper really, pre-market here, copper really popped up. Well, I'm glad I took a majority. I had 2,500 contracts on copper that I'd averaged into. Let me see. I don't have my Street Smart Edge up yet. I think I'm down to only 400. I took a lot of profit. And I mean, I averaged in on these 2 days right here, on these 2 days on copper, on those copper shorts. So, I mean, I'm certainly above break even, although those last 400 with a big jump up like that, I'm probably break even on those last 400 at best, maybe even a little bit under. That's a big jump back up. Let's see here. Hang on just a second. Let's log in here. Dr. Copper, as it's called. Oh no, okay. I'm zero on. Yeah, I've flattened out everything on the close on Friday. I remember now. Yeah. Oh no, nope. I'm sorry. I do have four. Come on. Where's the problem here? There we go. No, I am still long. Oh, come on. Oh, come on. I can't. Why is it doing this? Oops. Okay, for whatever reason, my resolution settings are screwing up. Yeah, I'm still long 4 contracts on copper here. So, alrighty. Anyway, though, and so Tesla, Amazon. There's really not much to cover in the trade ideas. My trade ideas, it's all red essentially. If it's green, it's only traded a few hundred shares, on the upside. So these are pretty much Tesla, Amazon, the SPYs, the Qs, copper. I have BABA up. Now here is a picture perfect example. Here is a picture perfect example of a head and shoulders reversal. So here we have the trend is in this direction. And then the neckline that this thing created was in the opposite direction of the trend. Here's the left shoulder, here's the head, here's the right shoulder. The right shoulder never made it to above the left shoulder, and it came down and it blasted through the neckline here. Now this wound up, I did make money on this trade, but there's something that happened back here. This is in December of 2020, roughly 2021. So what happened back here is I did manage to jump into. Let's get rid of that. Actually, I did manage to jump into a short position, really close to the test of this neckline right here. And it went down, and then on the way back up, I wound up exiting that first position that I took, and I did manage to exit it with some profit, but not like highly profitable, right? And so then I jumped into another short position on BABA, like I don't know, a day or two later, like on this day, or like the next day, right? And I went down pretty far and then started coming back up. And so again, I made a little bit of money. I was going to hold on to it right here, but on this day they announced, so BABA was going to get delisted. Like they were talking about delisting BABA from the U.S. exchanges, right? So what that meant is one of two things. It would get delisted, and I wouldn't be able to close out my trade on it, or it would stay listed, and that would be bullish for it if I was short. So I wound up just getting out and not messing with it again, and didn't look at it again for like a year or so again. I mean, it was quite some time when I looked at it again. And you can see here, this thing has just trailed down the neckline ever since. It's just gone right down the neckline and has been very bearish. This is a reversal pattern. That is legitimate head and shoulders reversal pattern, long-term change in direction of trend. That's what you're looking for in a head and shoulders pattern. What's happening now with the S&P, it really could be, it really could be a change, a long-term change in the direction of the trend. With a central bank and the way things are kind of working, it's, I would only trust the broader markets for short-term trades. Okay. So right now, this morning, if the SPY were to open up, let's see, it would open up 0.04% higher than its previous close. Both Amazon and Tesla are still looking pretty weak. The Qs, tech is weak. Let's see what the 10 year is doing here. Something interesting with the 10 year too, what I noticed is that let's see, the 10 years down below the bottom of its range here. Why didn't it change? I went through and I changed those parameters this morning. Let me go back here to see where's is it? There we go. Yeah, the 10-year ought to be right here. 1.74. I went through and I made all these adjustments this morning. I don't know why it didn't stick on the 10-year. Should check my other ones. 2.07. Really strange. See if that one stuck. That's fixed. No, actually none of them. I don't know why. I went through and I changed all these this morning. I'm going to have to go do it again. All right. Top end. I'm just going to do this one really quick. 45.62, and then the bottom end here is 43.61. All right, everybody. That's going to be my pre-market strategy session here. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session.